in the United States, things are not looking so good. And that's because we saw another CPI reading at another higher number. Now, this is bad for the United States. It's bad for your Bitcoin, your cryptocurrency. It's bad for your stocks. It's bad for your assets. But it's also really bad for emerging markets. So let me explain to you what is going on. Now, if you haven't heard the news, if you weren't paying attention, the U.S. inflation gauge, which is CPI, hit another 4-decade high of 9.1%. Ooh, man. I've been calling it 9 for a while because it was 8.6, so I just kind of like rounded up. But 9.1. Now, there's a lot of reasons why that's completely false. So, for example, I use this, I call the CPI, which is the Consumer Price Index, I call it CPI, because that's because they manipulate it so much to basically show whatever number they want. And so the way it's supposed to work, bear with me for a second if you already know, but it's supposed to represent a basket of goods. So if you went to the grocery store and you bought a basket of goods in the 80s, then you went back over time and you kept buying the same basket of goods, it would track that. So it could basically track somebody's quality of living. The problem is they've changed that so many times, so they'll do substitutions. So, for example, you used to be able to eat steak at every meal, and now you have to eat tofu or something like that, right? They downgraded it to a hamburger meat, and then downgraded to turkey meat, and then downgraded to tofu. So you can still live, you're just not eating steak every day, for example. Other thing they do is they'll do like if things improve, like your gasoline, they put new additives in there, so it's better for your engine. So since it improved, they don't count the cost increase of gasoline. Well, gasoline went up big time. So you can see how heavily manipulated that number is. Another one they do is that obviously home prices have gone up crazy in a lot of areas across the United States, 100% in some areas, but yet they don't track the price of a home. What they do is they track something called the rent owner's equivalent, and so they do some random survey supposedly and ask homeowners what they think they could rent their house for. Now, they didn't ask me. I don't know who they asked, and they're not asking experts like what they think they could rent their house for. What they should be doing maybe instead is just looking at the statistics for rent. That might be better. But anyway, many reasons why it's manipulated. Now, the thing I want to point out before we jump into this is that they really overhauled the CPI measurement in the 80s, and they really overhauled it again in the 90s. If we go back and measure inflation as we did in the 80s, we're at 17 or 18%, not 9%. And so the reason why that's important to understand just before we dive into this is because they're saying that we haven't seen this number in 4 decades, but I would argue that when we saw this number 4 decades ago, it was at a real number, and we're probably double what that highest point was back then. But so what happened? So new CPI inflation, inflation's out of control. Average person can't afford food. They can't afford to travel. They can't afford gasoline. They can't afford to take a trip, all these things. And stocks are down. Bitcoin's down. Cryptocurrency's down. Like, what the heck is going on? Well, that's what I want to break down for you today so you can understand exactly what's going on. Now, like I said, it was at 8.6. It was at 8.4, then 8.6, and now 9.1. And you probably already know by now that the central bank, the Federal Reserve, is committed. They have vowed to bring inflation down. Now, I say this all the time. If you tune in with me each and every week, I apologize for sounding like a broken record, but measuring or the definition of inflation being prices going up, consumer price inflation, is a little bit, in my opinion, it's the wrong way to talk about it. Under the Austrian economics viewpoint, inflation is when the monetary supply increases. Prices going up are just the result of that. But there's all types of prices, and there's all types of reasons why those prices can go up and down. But the Fed's committed to bringing them down. How can the Fed, that controls monetary supply, their mandates are stable prices and full employment, their tools that they have are basically Fed funds rate, interest rates. They can set that. But how are they going to affect the price of bread or Chipotle or gasoline or my airline ticket or my toothbrush, like, oil for my motorcycle. How can they affect the price of all of those things when all they have is the Fed funds rate to set that, which is the interest rate that the banks get charged, but the banks create the money by lending it out, and the banks can charge whatever interest rate they want. So the Fed can't force the banks to create money by lending it, nor can they adjust the interest rate that the banks charge. All they can do is adjust the interest rate that they charge the banks. But the banks get to set their own rate, and then they get to make the spread. So the Fed could move the rate really low, and the banks could still keep the rate high, and they could make that whole spread, the arbitrage. Or the Fed could raise their rates, and the banks could leave it where it is. So they're trying to adjust the price of everything: a bottle of water, a bottle of soda, a sandwich at the local shop, how much I pay for my Zoom subscription. They're trying to change the price of all those things by adjusting the interest rate, the Fed funds rate, which doesn't even affect the banks lending money out or what they charge. Seems kind of crazy, doesn't it? Yes, it does. But anyway, they're not going to stop trying. Let's give them the benefit of the doubt. They vowed to bring the price down. Now, as I've been talking about each and every week, they can't really do it. There's nothing they can do. The only thing they can really do is they can try to crush the demand. So if we want to adjust prices, there's two things. We can increase the supply, or we can lower the demand, and they're lowering the demand of that. So why is it that when inflation hit 9.1% this week, the CPI, we saw the Bitcoin price tumble down a little bit, which it's back up to where it was before. We saw stocks going down. Why is that? Because I thought Bitcoin was supposed to be an inflation hedge. So if we have high inflation, shouldn't the price of Bitcoin be going up? That doesn't make any sense. Well, it does if you kind of understand how this all works. Because inflation is continuing to rage on, and on, the Federal Reserve is committed. They vowed to bring it back under control. And again, all they have at their disposal, the only tool they have, is to adjust the interest rates. And so what happened is, because of that high inflation print, so because they're vowed to get that number down, the Fed needs to see steady progress. So we need to have gone from 8.6 to 8.2 to 7.8 to 7.2 to 6. You get the idea. We need to be trending down. The problem is that we're still trending up. Now, the Fed has been raising rates. As a matter of fact, at their last round of raising rates, they actually raised rates more than what the market had anticipated. So they're being even more aggressive than many people thought they would. But no matter how aggressive, no matter how much more aggressive they've been than what people thought they would be, still not taking a dent out of inflation. So because it's continued to go up, it hasn't even stayed the same, much less gone down. It actually went up, and it went up by a pretty big chunk. I mean, from 8.6 to 9.1. That's a big leap forward. And so the fear is, the reason why the market reacted the way it did is because they're saying, well, shoot, if the Fed hasn't been able to get the rates to move down, and here we are again at a new record, they're going to have to be even more aggressive than anybody thought they would be. And people realize that the Fed, they don't really have any tools to get to a perfect number. They were trying to get to 2% inflation. They couldn't get to 2 because we had no inflation. They wanted to get it up to 2. Then they said, shoot, well, we can't get to 2. Let's see if we can get to 4. And they overshot to 9. So now they want to get it back down to 2. Ooh, and do you think they're going to land at 2? They'll probably end up at -2. And so the market's going, well, shoot, now they're going to way overreact. They're going to go way farther than they should have because they have no control. And we think that they are going to crash the markets. That's basically what the markets are saying. And so it says here that the Federal Open Market Committee, the FOMC, is scheduled to meet in July 26th to 27th here at the end of the month. A couple more weeks to discuss further monetary tightening, meaning, well, let's restrict the money supply even more. Now, remember, the booms and busts come from the Fed increasing the money supply and decreasing the money supply. So they create the booms and the busts. It's not. They are natural market cycles. They get exaggerated because of the Fed. And so that's what they want to do. They want to tighten, so they'll crash the markets even more. And this new CPI number gives the central bankers a green light for another quote-unquote aggressive rate hike. Now, I love this quote from Fed Chair Jerome Powell. Quote, "Is there a risk we would go too far?" Certainly there's a risk. That's like the understatement, right? Is there a risk we'll go too far? They always go too far. They couldn't get to 2%. They couldn't get it up. We can't get it. We can't get 2. We can't get, okay, we're going to overshoot. They said, well, quote, let it run hot, meaning well, if we get to 4 or 5, we'll blend that in with the average of being less than 2, and we'll end up with like a blended an average rate of 2, 3. We'll call that good. They got 9. Is there a risk we'll go too far? Certainly there's a risk. That's Jerome Powell, the head of the Federal Reserve. That's what he said. Yes, there's a risk. Of course, they always go too far. And so they way overshot it. And then the only tool they have is to destroy demand, crush the stock market, crush cryptocurrencies, crush the job market, crush the economy. Then people won't spend money. They'll be too broke, and that will cause prices to come down maybe. Now, I tend to think that they could actually cause prices to go up even more by doing that.